The commodity spectrum. Well, let's bring in Pete McGuire, CEO of XM Group. Pete, welcome to you. Greenback moves as some kind of a lead play on everything now. Realistically, is the Fed off on hold for what, easily the rest of this year, or how do you see it?
Good afternoon, Carson, Greg and Scott. Yeah, no doubt. I think, the best play could see a rise in 17, Carson. There's no chance, well, we don't think there's any chance that you're going to see any upward movement from the Fed over the next 6 months, leading into the Trump saga and of course, Clinton. So we'll just get through the Brexit issues. I think that'll certainly create even further volatility for the rest of this month and certainly leading into the early part of July. I think we've got another 10 days of that, and then it'll start to subside a little bit.
So, Pete, Greg, do you think that last week's highs in crude and energy was where it's at? And if so, where do we find the base? Well,
I think so, Greg. There's some of the big players, and we certainly take on board, the Stan Druckenmillers, of course, Soros and those sort of hedge fund guys. They were very much prepared for it. We've been talking about Brexit for the best part of, 3 to 4 months now, and it came to fruition, and we're living through it now. So, yes, I think the market was certainly pushed quite high to 51, 52, and we saw that 5% correction Friday. It'd be interesting to see what happens on WTI tonight once New York opens. I wouldn't be surprised to see a little bit further downward pressure there. It's been interesting over the today's trade in Asia, but I think there's further downside, and of course, the dovish tones coming out of the Fed.
Peter Scott Phillips, is this a fear trade, or are there genuine fundamentals under this? We know that even if there is a global recession, which is incredibly unlikely, oil demand drops a little bit volume-wise. Of course, that has a bigger impact on price, but is this just the fear trade, or is there some fundamental rationale behind it?
Well, Scott, we always know that there's too much production. That's the simple reasoning that you've seen those cheaper pricing, and of course that the supply can't keep up with it, or demand, I should say. So from the demand side, we're in a state of flux. As it moves higher, you're going to see all of those rig, those rig players come back into play, all the frackers and so on. So that's going to be the handbrake moving north. We're certainly worried about US dollar and where that all more or less, goes into the big melting pot of it all. And at the present time, I think there's a chance for it to be, a $45, $46 in the short to medium term. I think there's further downside in it. And that's, traders have got their own views on that, but that's just our opinion over the short term.
Your thoughts on the trade in precious metal that is bullion, the Goldman Sachs call out now, it's raising the forecasts. Now, it's been wrong before across asset classes, so why do we pay more attention to this call than others in the past?
Carson, when you look at gold, and it's a wonderful graph to look at from the start of the year, we're at 700 British pound to an ounce. We're now nearly at 980, 990. It's up 40% in that period of 26 weeks. We've seen, huge rise in the last matter of, a day and a half. Well, taking us back to Friday, of course. And they're saying now in pounds you could see 1,020 or, that, at least that sort of level. In US dollars, 13.58 we hit during Friday's trade. We're back at about 13.30 at the moment, 13.25. And many analysts are saying, and the economists, you're going to take that 1,400 handle out. It's a wait and see, but certainly the currency comes into play. And what happens as far as contagion? What happens if Denmark moves forward? There's still a lot of uncertainty. And if you put your mind back to the likes of the Jeremy Rifkins that have been saying, and Jim Rogers, will the EU stand up in time? And many saying, 2020, 2022, it'll be totally dismantled. So that leads another level of confusion.
To justify what kind of a cap would you be seeing, would you be calling out? To see a rally of about, what, 55 an ounce on Friday, what's the upside potential on this?
Well, we saw 13.58 and then it corrected. That was up 8%, moved back and it's closed up around about 4.8, 4.9%. Yeah, there's every possibility you'll take that 13.60, 13.80 out. I wouldn't be surprised within the next week. There's still so much uncertainty, so much, again, that volatility. And I don't think the market's stopped yet. So when you do see these opportunities, you've got to strap yourself in because you're either going to be right or wrong. And many retail traders are certainly looking at it at the moment, and they're in for very short periods of time and certainly profiting nicely.
But you're painting a picture of a couple of years' worth of gold strength on your version. We're seeing prices that are high, probably going higher, and as you say, an EU that might be in some sort of stress or pressure for a couple of years to come. Gold then becomes the default, I guess, safety. Is that what it is? Is it the safe asset in that context?
Well, I think so, Scott, and I think the other side, of course, is what happens if, as we move forward, if the US doesn't raise rates, and we're sitting here in a year's time and they still haven't raised them, and if economies are, spluttering along and you've got more weakness, is there any chance you're going to see easing again by the Fed? So that takes into some sort of consideration, and I think that just underpins the uncertainty factor and, of course, where gold's situated.
Nice to talk, Pete. Have a good week.
Thank you, Carson.
XM Group CEO Pete McGuire.